So now we're going to go into the demonstration a little bit. So what we're going to do is dip into AX. We're going to go and look at the setup of a customer. So first of all, by the way, for the scenario here, I'm just going to do a third-party order. This is as if the trader is completely off our system. So we've got a separate entity down the road who's called us up and says, I need you to handle some produce on my behalf. Can you charge me for what the services you perform on it? So it could be that they don't have capacity themselves today. So this is a sort of an ad hoc requirement, and therefore there's no extensive interfaces in this case between the external trader and the our internal service provider. Later on, we'll look at the more heavy integration. So what we're going to do is look at the setup of a customer that we're going to use to charge for the service. We're going to look at some of the consignment charge rates that define how much we're going to charge that customer for those activities, and also the revenue rates that relate to how much, the revenue rates is how much we're going to charge them, and the cost rates is how much it costs us to perform those, so we can see our profitability. Then in this case, we'll perform a third-party receipt. We'll see how it's pulled through the automatic charges. We'll add some manual charges, and then we'll look at the on-hand stock query and see how it's handled the third-party product. And then we'll look briefly at the consignment profitability so we can see how that particular consignment has performed on the service profitability. And finally, we'll look at billing of the service charges to the end customer. So without further ado, we will go into our AX instance. So here we have our AX instance. It's worth just reminding ourselves here that this is configured so that I can see all options. In most situations, you would configure your menu so you only see the things that are most relevant. So for instance, you might have just the key things relating to orders rather than the full suite of functionality. So in this case, what I'm just going to look at very briefly is the setup of our third-party customer. So here we've got a company called Clark Overseas Supplies. So they are handling produce, they're a trader, and they want us to pack some goods on their behalf. So let's just look at this customer for a moment. In order to bring produce in for them, we need to link them to a vendor, so we can say that the vendor is used to bring the goods into stock. So here we see from a setup point of view, we have a vendor account linked in the remittance field. So this is the vendor account linked for the produce that's going to come in. So the customer and the vendor are linked. So therefore, whenever we bring material in for one, then we know it's going to be invoiced to the other. From a third-party services point of view, that's the only bit of setup I need to do on the customer. Let's just have a look at some charge rates for a moment. So I'm going to use the consignment system to look at the charge elements. So in the charge elements, these are the buckets by which we can hold the cost and the revenue of activities we are performing on the stock. So here I have a service provider handling charge set up, and I've got some accounting set up on here on how that's going to be used. But the most important thing for today's demonstration is behind this. So I have a charge rate here that says I have a handling cost, and in this case it's based purely on the produce type, but it could be based on any number of other parameters. And it says I've got a rate that is dependent on number of logistics units. So by logistics units here, I'm in the number of pallets. And I'm saying for a particular source, so Clark Overseas Fresh Supplies has a charge of a cost to us of £7 per pallet that we are receiving on a third-party receipt. So the system knows how much it's going to cost me to receive these goods, and that's cost to me. I also have the setup of a revenue charge. So in the revenue charge, I've got what is the cost I'm going to charge to that particular customer. So here I can see my Clark Overseas Fresh Supplies. I'm going to charge them £10 per pallet for each logistics unit. So essentially I should be making 30% profit for every pallet I receive. So what I'll do now is I'll go and actually raise what we call a third-party receipt order. So a third-party receipt order is an instruction to the system to say I'm expecting goods to come in. And as soon as that instruction is there, then the system knows there's expected stock, and it can take that into account using all the standard planning and forecasting tools that are provided as standard within AX. So this third-party receipt order essentially gives you the supply to be taken into account in all the master planning within AX. And again, that's a unique feature. Other solutions do not have the capability of doing full master planning of third-party materials. So here what I'm doing is I'm creating a third-party receipt for my supplier of Clark Overseas, and I can select whereabouts I'm going to get the goods from. So against that particular supplier, I could have multiple addresses, collection addresses for where I'm getting the produce from. In this case, I'm going to bring it into my facility, which is the North facility, and I have a warehouse N1. So I'm going to bring this into stock. So I'm going to create this third-party receipt order. On the header of the third-party receipt order, then, what it tells us is who is the supplier, so who am I getting the goods from, and essentially who is the invoice account, so who am I going to end up charging for this. At a line level, then, what I do is I add my items to it. So in this case, I'm going to do a Raspberry. I'm going to use my LINKFRESH dimensions, which you may have seen in some of the earlier webinars, to specify what type and characteristics of material I want to bring into stock. I'm going to bring in 1,000 eaches. In this case, I've got an each represents one punnet. And from a simplicity point of view, whilst I could add a lot more detail, I'm going to leave it as simple as possible for today. So that is a third-party receipt to say I'm expecting to have some third-party goods of this nature received into stock, and I can specify the expected delivery date, etc. Once my third-party receipt is on the system and I've confirmed it, then the system then knows that I'm going to need to receive this into stock, and the warehouse can then the physical goods. In the background, the system has created me a consignment order. So this consignment order is the thing that is going to hold the cost and the revenue for billing purposes later and for profitability reporting purposes. What you'll notice is the third-party receipt order is very similar in principle to a purchase order, but of course the key difference to a purchase order is there is no value, because we're not valuing the stock on receipt. It's not our inventory, so when it comes into stock we need to handle the inventory quantities but with no stock valuation. So once the third-party receipt order is on, we can create a warehouse process order, which is our document to receive the goods against in the warehouse. And from that moment on, the warehouse have no need to worry about whether it's our stock or whether it's somebody else's stock when it comes into stock. So the warehouse process order allows them to receive the goods either on the handheld or directly in the client, and they can do them seamlessly with any of their own stock. So there's no difference to them of the way that's handled. It's a big benefit in the warehouse. What I will also just mention is we set those rates earlier on to say how much the charge rates were going to be for bringing this into stock. Here on our third-party receipt order, we'll see those in the consignment document charges. So what we can see here is it's pulled through as these consignment document charges. When I bring this material into stock, I've got a service provider handling charge cost of £14 that's going to be accrued. So basically this is saying the cost of my labour to handle this and bring it into stock, I'm assuming to have a cost of £14, and I'm going to charge £20. So that is all tracked against the third-party receipt. If I just go back to my warehouse receipt order now, so now I'm representing the person in the warehouse who's going to book these items into stock. So what I'll do in this case, I'm going to use the client. I'm going to use what we call our product tracking builder, but incidentally all this functionality is available on the handheld. The product tracking builder allows us to say, I've got an expected receipt here of 1,000 units. I want to build some pallets for that. So looking off the back of the vehicle that's just arrived, I can see I have 1,000 units. They've come in a particular distribution packaging configuration, and I'm going to book them into a particular location in the warehouse to start with. And I can see here the system has recognized, because of the quantity and the distribution packaging, it knows how many items there are on a license plate. By license plate, by the way, it's actually the same as pallet for most people. So what it's going to do is generate me 2 pallets to represent this receipt. And I can then specify on here, exactly as I could for my own material, who is the grower and the growing site for this particular material, and any other attributes at this point. Now, all the other standard LINKFRESH functionality we've seen in the previous webinars is available to us here. For this case, I'm going to keep it simple due to the timescales of the webinar. So I'm going to confirm that these are the 2 pallets I've received. What I will just do is I'll just show the pallet IDs. So I'll just pull in the license plate and the batch number on here. What we'll see is it's created me 2 license plates, so 2 pallet numbers. And I have, in this case, I have a single batch number. So I'm going to save that because we're going to use that later on when we look at the stock. So it's going to bring me this stock in, it's going to post it with full batch traceability, and we'll know exactly what license plate has what batch on it, so we know what stock is where. I'm going to bring this into stock, so what I'm going to do is I just need a vendor's delivery note number. So let's say we have vendor delivery note number 4. One other thing just to note before we post this, all the packaging, the distribution packaging functionality in standard LINKFRESH is still maintained here. So it keeps a record of how many pallet bases and how many trays are present along with these goods. So I can see there are 2 pallet bases and 100 yellow trays as part of this receipt, and the system keeps track of all that distribution packaging just like it does for your own stock. When I post my receipt, what we'll see is it will go off in the background and post that into inventory, and subject to all the standard location directives that AX can provide, this is now telling us where we need to put away the product. So what we see here is the receipt has been processed, the packaging journal with all the packaging items has been processed, and it has generated work, and by work what it means is a pick and put instruction, and that has been created off the back of that. So for the warehouse operatives now, the work is handled exactly the same as any other work of their own material. So if we look in the warehouse system and we look at all work, we see that here as work that needs to be put away, and it's exactly the same in structure as any other work for own material. In this case, what I'm going to do is I'm going to actually manually process this work on the client, but normally you would do this on a handheld device. So I'm doing this in the interest of speed. But in here, what we can see is it's taking account of the capacities of the bins, which it's taking into account not just own stock, but third-party stock in that. So it knows that a bin has some third-party stock in, so therefore it can't attempt to put somebody else's stock in there. So it has full control of bin capacities within here. So in this case, I'm just going to validate that work and post that into stock. And now, having done that, my third-party receipt is booked in and is available for orders. Now, in the interest of time for this webinar, we don't quite have time to then put it through full third-party production and a third-party dispatch, but exactly the same principles apply here for production and dispatch as they do for regular production and regular sales orders. So the system tracks the goods through just like anything, any of your own inventory. Let's just go for a moment and just look at the result of that. So if I go and look at an on-hand stock query, and in this case I'm actually going to use a predefined stock query to show me just third-party stock. What that does is it actually has a filter on it to say just show me all stock that has a flag to say third-party. And what this will do is it will go off and calculate all our stock figures across the entire operation, and it will tell us what stock we have of third-party. So if we look down here, here is the batch number that we saw earlier. So here we can see the batches in stock. A little bit of a screen refresh issue there. And we can see the quantity of physical stock we have, and we can see again whether there's anything reserved against it. Let's just have a look in the background of this. If we just drill down and look at the batch behind this then, how does the system know who owns what stock, and therefore who is allowed to sell, to ship that out on orders? Here we can see that the flag on the system said that it was a third-party stock already. So we already know the system knows it's third-party. Down here we can see it's kept a track of who the third-party owner is. So against the batch of the material that's been received, we know the owner of the stock, and therefore from a system point of view it can now filter that to make sure we can only ship this person's goods to dispatches that relate to this particular owner. So what we'll just do, just to wrap up this this simple example, is let's just go and have a look at the consignment that was generated for this. If we go and have a look at our third-party consignment, that we created back in that process. So here is our third-party consignment for Clark Overseas Fresh Supplies, raspberries. If we look at the charges form, what we can see is it's captured for us the handling charge of £20, which is income, and the costs of £14, so we can see the margin of this particular consignment. And by the way, this could also be looked at a grouped level, so I can look at a total here to say, okay, what if I group the two, the income and the revenue, together into a group of all handling charges, what was my income and what was my cost, and therefore was my profitability of my handling activities. Just to look a little bit more about what we do with this now. So we've captured these costs, but at the moment we've not invoiced them. So let's just go for a moment and invoice to our customer. So let's imagine at the end of the week we want to invoice Clark Overseas Supplies for all the services we performed on his behalf. So I'm going to create a new sales order for this particular customer. And against this particular customer, on my LINKFRESH tab at the top, I have a new feature called the Charges Worksheet. The Charges Worksheet allows me to get a list of all unbilled charges so far, and using filter criteria, I can then pull in how many charges are yet to be billed. So here I can now see that I have a third-party service charge to apply for 1,000 units at a rate of 2p a unit. So that's £20 across this particular activity. And down here I can see what those charges relate to. So I've got the mapping of exactly which materials that relates to. So once I'm happy with my charges on here, I can look at the summary. Actually, we'll leave that off. So once I'm happy I've got my charges on here, I can update the sales order. And now it's pulled all the details of what I need to bill through. And I've put that onto my sales order. And now I can invoice that simply. So I can just create an invoice on the system. If I just specify I want to invoice everything on here. And now I can raise an invoice for my customer and send that out. And that, by the way, that invoice could be sent out via EDI or whatever else you have configured in the system. All the service charges are then fully tracked. All the financials are fully tracked. So here on your invoice journal, you have a voucher for which you have all the details specified directly to the GL. So there's full GL integration, and everything is neatly integrated with all the standard AX capabilities. And that essentially gives us a sort of a good flavor for how the third party and the service handling works. What I'll just do for a second is go back to the consignment piece and look at those charge rates once again. So in our case, we had a charge that related to inbound charge, but in fact, you could have any number of different charges and they could be triggered in different places. So we could have a charge that might be based on a rule, and that rule could be based on a number of different criteria. So in this case, rule 2 is based on the item, the produce type, and the variety. So you could have a different rate for different varieties, or a different rate for different distribution packaging, or a different rate in a different warehouse, or a different rate for a different brand. So Tesco's branded materials maybe has a different rate to Walmart. All these things are capable, and also we can have the charges applied at any of these different places in the system. So on production, quality orders, write-off, transfer orders. In addition, this is fully integrated with the haulage capabilities. So if we have haulage charges originating from the AX transportation system, they are also captured and invoiceable in exactly the same way through the same mechanism. Okay, well, I think that sort of covers the guts of the third-party principles. So what I'm going to do now is just talk a little bit about this much more advanced capability of the trader service provider functionality. So the trader service provider functionality allows you to go to a situation where both of these are within the same AX instance. So both the trader and the service provider in the same instance. So it's a shared warehouse essentially. You could have two different traders. So you could have two different trading businesses and they're both being packed by the same business. So we're capable of supporting that scenario. And also the service provider can own some of their own stock. So a service provider can support multiple traders. supply and the service provider is only accessible to demand from the owner of that stock. So any stock that they're holding for trader 1 is not accessible to trader 2. The trader can also initiate transfer order from one service provider to another, and also the service provider, if they wish, can contract out their own services to their own stock to somebody else to pack. So we can support some very complex scenarios, whatever the business requires. The key thing though is that here, this entity, this relationship between the trader and the service provider allows you to make sure that the trader is being invoiced for the services and the service provider can see the profitability of their service activities. So how does it work? So on the trader side, you create a purchase order. That's exactly as you would for any of your own stock. If you had your own warehouse, you create the purchase order, and because the system knows which warehouse is managed by which service provider, in the background it can seamlessly integrate to create a third-party receipt. Stock is then received against the receipt, and that receipt on this side is then fully is interfaced back against the purchase order. So you see the stock received against the purchase order on the trader side as well. So this is quite subtly different to regular intercompany, because what it means is you can see your own inventory valued over on the trader side. So the inventory exists in the trader side with a value, and it exists simultaneously in the service provider side without a value. That's quite different to intercompany, where the stock can only exist on one side or another at a time, and the value resides with wherever it's sitting. So this is just very noticeably different to regular intercompany functionality. The stock exists in both places at the same time, and it's valued in the trader side for the inventory valuation, and it's valued in the service provider side for the costs of the handling. So I talked there about the integration on the purchase side, but it's the same throughout. So if I create a third-party production order here, then that's interfaced and visible, and all the stock transactions are seen on the trader side. And all the costs related to any of the activities on the service provider are also simultaneously passed back to the trader side. The trader places their sales order, and that is integrated across to this, what we call a third-party dispatch on the service provider side, and that's their instruction to ship. So the trader takes care with the relationship with the customer and the vendor. So they buy the goods, they place the purchase order, and they raise the sales order. The service provider does everything to do with the physical movement of the goods. And this was the representation of the cost piece. So the service provider captures the expected revenue and charges it to the trader. The trader creates an accrual against their own consignment for the services provided by the service provider. And we've just seen the billing piece, which again is fully interfaced in this instance. So let's just have a very quick look at the setup behind this. So on the AX side here, we're going to look and just see the setup on a vendor to support this. So just to represent this, I'm just going to create a new workspace. So over on the left side here, I'm going to have what we have a company which is our trader. And on our right side over here, we're going to have our company which is our service provider. So LFI is the service provider company, LFT is the trader company. So the trader sets up a relationship with a supplier. So the supplier over here is the LINKFRESH International Services vendor. So this is the vendor that they are going to pay for the services. Against this vendor then we set up an intercompany relationship in the standard intercompany links form, but here we have additional LINKFRESH policies and mapping. So here we can see the vendor on this side relates to the customer of LINKFRESH trader from the other side. So in LFT, the trader, the vendor is this reference. In LFI, the service provider, their customer is this reference. So by doing that, the system knows who is trading with what. Over here, we configure the links to say which site and warehouse on one side map to the site and warehouse on the other. So anytime I handle goods in my trader for the site of West and Westville, then that stock is handled on the other side in North and N1. And the same, by the way, for mapping of charges. So what we'll do now is a very simple purchase order on the trader side. So if I raise a purchase order for any vendor, so this I'm just buying stock from anybody, if I'm having it delivered to my west site, Westville, then the system knows this is the site and warehouse that is handled by a third party, and they know that it's handled by this third party. So as soon as I create my purchase order, in this case, for my Raspberry items, I'm going to use the same. As soon as I raise my order on here, which by the way has a price in this case because it's a genuine purchase order, what happens is the system, on confirmation, looks at this, identifies that this particular order is to be handled by a third party, and it synchronizes the purchase order to become a third party receipt in the other entity. As soon as it's done that, I can now start handling it on the service provider site. And in the background, it's created consignments, so I can track the service revenue and cost on the service provider. And over here, it created my consignment for my trader, so I can see the profitability of my material in the trader from this. So just to highlight what that's done then, I created a purchase order in my LFT company. Over in my LFI company now, if I go and have a look on my LFI company under the procurement tab, I will find my third-party receipt orders, and here I will see the receipt for ripe bananas that has come across from the other side. So now we can see this instruction to pack to receive these goods, and we can see who we're receiving it from and who we're going to invoice. So it's all related to the LINKFRESH trader entity for the invoicing. When I receive this into stock, so what I'll do is a very quick receipt of this one. I'm going to create my warehouse receipt order and book it into stock. So just like we did for the manually created one, I'm going to use the product tracking builder to specify the pallets that I'm receiving. So I'm saying there's 1,000 units to come into stock. That relates to 2 pallets. Here then I can confirm the pallets I've created and put in a vendor delivery note number. And on posting my receipt in the service provider, the system then knows that stock does not belong to me. So it knows to transmit that back to the other entity. So here we can see it's synchronized the record, third-party receipt, back to the purchase order on the other side, and it's created me my work for the warehouse. So we can then go off and post our put away. So in the service provider, we'll go and put the stock away into the warehouse. So this would normally be done on a handheld device. So here I'm using the put away, so it's suggested to put it away into the exactly the same normal locations we would expect to use from the location directives. The work has been processed, so that stock is now put away. And in the background, the system has been synchronizing those transactions. So if I just close down my service provider again for a moment, so just to clarify, close a few windows just to clean up. So what happened is we posted our warehouse receipt order over here in our service provider. Over on the purchase side here, if we go back to our purchase order, and we look at the receipt tab, we'll be getting a receipt transaction sent across from this entity. So let's just go and have a look. There's a synchronization process that takes a few seconds to fire it across. So if we go and have a look at that now, we will look over, sorry, in the trader. So the trader, we have a section on the system administration where we have a staging table that says these are the transactions that have been sent across from the other entity. So we can see here that what's happened is it's sent across the receipt that was taking place in the service provider. It's come through as a service provider third-party receipt here, and it's been synchronized at 11:11. So it's posted that and received that into the trader. So let's just go and have a look again. Maybe I was just a little bit too quick to look at that. So here on my purchase order side, where I had my receipt for ripe bananas, Here we have the journal for the receipt. So what it's done is it's transacted and posted the receipt in this side. So here we can see the reference to the vendor's delivery note number that we put in on the other side. And from a consignment point of view, we've got all the capability of looking at the consignment on this side and seeing all the charges that have come across from the other entity. Okay, so I'm noting we're running out of time for the webinar, so let's just click back over here and make sure we've seen the key points there. So I guess the key point there was this full integration across the two entities between the service provider and the trader, including the financial and the inventory elements. So just to highlight the benefits, so the service provider has the benefits that they're able to manage the cost and revenue associated with their services, and they can keep those service costs hidden from the trader. So what they charge for them, they can track as well as what they cost them, and they only need to publish to the trader the things they want to publish to the trader, which is how much they're going to bill them. The trader's got the ability to control the costs and revenue associated with the stock, but again without transmitting the cost and sales values to the service provider. So again, they've got complete autonomy to do what they want with costs without having to publish that to the service provider. Because ultimately, if the two knew each other's costs and revenue, they could potentially be manipulating their prices accordingly. And what this provides is the capability of running a full shared warehouse and full shared production facility. It's seamless for operatives to use, no logging in and out of different systems, and it's got full support for all the standard functionality such as the mobile and production, etc. So what we think is we've got here some really rich and unique functionality that we think adds real value to the AX product. Fully supported within this is the mobile QC and all other features within the LINKFRESH infogram.